For much of my career, I've been very interested in studying crisis and crisis alpha and how systematic strategy perform during periods of stress. And so what I wanted to do today is first talk about what is crisis alpha, and then I want to talk about what's happening now in the markets because things are so uncertain. And finally, I want to give some advice about thinking about things looking forward in such an uncertain time that we're at right now. So first of all, crisis alpha. Crisis alpha is a concept that I came up with back about 10 years ago following the financial crisis. And what I was focused on is trying to understand which strategies do well in periods of stress in markets. And in this journey of trying to understand why trend following and other strategies do well during crisis, I came up with the concept of crisis alpha. And crisis alpha are the opportunities found during periods of stress in markets. Now, this is caused by the persistent trends that occur during a crisis environment. And now you might ask me, what do you mean by persistent trends? Well, persistent trends occur during a period of crisis because so many investors are long equities, so many investors lose money, so many investors are forced to change and adjust their portfolios based on risk. And in those environments, that's precisely when many investors are coordinated in their actions and moving in the same direction. Those movements and the movement of many different investors from one asset class to another is what drives persistent trends across asset classes during a period of stress. Now, every crisis is not the same. In fact, one crisis can be very different, and the reasons for a crisis can be very, very different from one to the next. And in my book, we actually looked at 800 years of crisis, and what we found is that all crises created trends, but each crisis was very different. So if we take a closer look at what's happening now in markets, and we compare to something that is much more recent, say 2008, let's think about what's the same and what's different. So what's the same is we've had incredible trends in fixed income and commodities, particularly those assets that are much more linked to fundamentals, seem to capture some of these moves quickly. And second of all, when we think about what's different, honestly, we've experienced one of the largest falls in equity markets in the history, or at least in the last 100 years in global equity markets. And so I think the fact that the equity markets fell so quickly is definitely a very different signature of this particular crisis period. Second of all, one thing that I think a lot about is how important is the low interest rate environment going to be for us going forward, and what other challenges might it pose for financial markets? So as you can see, there's a lot of similarities. There are the trends that occurred, but the way that these trends developed was very different between '08 and today, but trends did definitely develop. So now when I take a closer look at what's going on now, about a month ago, we wrote a paper called Crisis or Correction, a quant's view of the coronavirus. And in this paper, I highlighted three things we're seeing now. First, high volatility. High volatility suggests uncertainties. Markets have been extremely uncertain. Second of all, we have seen that cross-asset trends have actually predicted and somewhat started to move before the actual fall in equity markets that we saw in February. So we've seen tremendous trends outside of equities that predated what happened in the equity markets in February. This may be suggestive of complacency, people not really understanding the severity of the situation until finally it was clear, and then it happened so fast. And finally, one thing that I want to highlight as a systematic trader is that we have seen massive changes or adaptations in our strategies so that we have been adjusting to this new environment very rapidly. In fact, when you take a closer look, trend followers have adjusted their positions, and trend followers on average have been positive in the month of March, which is suggesting that trend following has adjusted its positions to the current crisis, is now poised and positioned in a defensive way to potentially capture crisis alpha. If I want to think about what to expect now and some final thoughts, first of all, uncertainty is high, emotions are high. The markets are definitely not seeing clarity in terms of where this is going to end and how it's going to play out. And given that, moments of uncertainty and stress definitely drive trends of all different sorts. This means that there's definitely potential for crisis alpha going forward throughout the rest of 2020. And I'm definitely going to be watching how markets are moving going forward. I want to last leave you with an important point. I know that in a moment of stress, we often think that it's time to act. In fact, we need to remember that investing should be strategic, and managed futures as a strategy should be a strategic investment as part of our overall portfolio. Just to give a simple empirical example of that, since 2000, the S&P 500 and the SG Trend Index have realized roughly approximately the same return over annualized since 2000, but they've had very, very different trajectories, ending up at the same point, highlighting the fact that strategically, it's good to hold both of them.